So you'd like to know how the rich don't pay any taxes. So I'm going to show you exactly how they do it. But first, I want to show you who pays the most in tax. And it's likely you if you're a wage earner, meaning you have a regular job, like a W-2. Because a regular W-2 looks like this. If your annual gross is $100,000 per year, you're going to pay your typical 4 taxes, which is federal, state, if applicable, Social Security, Medicare, then you have your net. Let's call it federal 20%, Social Security, Medicare is 7.65. States will vary depending on your state, but for easy math, this could be on average 30%, leaving you a net of $70,000, and then you have your expenses after this. Now, there's nothing really you can do to save taxes on your wage earning W-2. You could have a 401k, which is not savings, IRA, not savings. It's a deferral for a future date. It's not savings. You can have a health savings account, that'll save a tiny bit. But there's not much. So W-2, you're extremely limited. And this is what you pay. There's nothing you can do. You pay the most. So you can't really compare this to what I'll show you later because it's not apples to apples. But this is your number one, your job, and you pay the most. Now, let's use the same thing, and if you're a business owner, it gets a little better. So first, as a wage earner, you have gross, tax, net, and then you have your expenses. As a business owner, it gets a little better because you have your gross, then you have your expenses, then you have your net, call the expenses $50,000, and then you have $50,000 net, and then you have times your taxes. Now, the taxes will vary depending on the business structure, whether you have a no structure, C Corp, S Corp, whatever, partnership, you're still paying pretty much the most on whatever, but you can somewhat control the net. Whatever the net is, then you're going to pay your taxes. So this is what active income looks like, W-2 business owner. How do the rich don't pay anything? I'll give you one example from an asset, one I'm extremely familiar with, and it's a residential real estate. So let's take one house, for example, with a current loan balance of $100,000. That's current loan. Now the current fair market value as of today, call it $300,000. That's the fair market value, giving you equity of $200,000. Most banks will allow you to go up to 80% loan to value, meaning that you can take a loan, you can refinance the $100,000, take a new loan for $240,000. That's the new loan. Call it a cash out refi. Now, what would that do to the 100? The 100,000 gets paid back to the existing lender, and now we have 140. So the 140 that's left over, where does that go? That goes straight to you. And it's completely tax-free because it's a loan. Loaning against assets, any asset, doesn't have to be real estate. It is tax-free. This is just an example of one house. Imagine, what if you had 10 houses? Same deal, you've been holding it, they have some equity. Now you can tap into 1.4 million using the same thing. Goes back to you completely tax-free. You don't pay taxes on loans. And this strategy, borrowing against asset, can work on any asset, even if you're holding a stock. Certain brokerages will allow you to borrow against your portfolio. Let's take NVIDIA, for example. If you've been fortunate enough to hold it, let's say for the last 7 years, look at the chart. You don't want to liquidate it and pick up the gains. And it's appreciated a huge amount. You can tap into that equity as a loan, and a loan is not income. So what you can do if you're faced with a W-2 or a business here and you don't have any assets, my recommendation is that you should immediately take a look at your situation, and your number one objective should be, how do you go from here to acquiring as many self-compounding, preferably cash-flowing assets, so that eventually you can get rid of the job if you don't want it, get rid of the business if you don't want it, and concentrate and put all of your efforts behind the self-compounding cash-flowing assets here, so you can tap into that equity completely tax-free, so you can use the exact same tools the rich use. Just get away from the active income.